am I a trader? Meaning, am I a trader in the eyes of the IRS? Not in my eyes, not in your eyes. Obviously, you are trading. You're taking the time to attend this webinar. But we're talking about is that the IRS qualify as a trader. So let's look at what the IRS says about this, okay? And this may be a surprise to you, but there is actually no revenue code or a regulation that defines what a trader in securities is. That means that no law was ever written that defines clearly what a trader is. You have to make 100 trades a year or something like that. Nothing. So it creates issues. Why is that? Because remember, what the IRS says to you are always, you're an investor. So if you're selected for an examination, and the IRS will claim that you are an investor, and you will try to claim that you're a trader, we'll soon show you why you want to be a trader. But you'll claim that you're a trader. There's going to be an impasse. We're going to go to the law. The body of law doesn't say anything. So at that point, it's between you and the IRS examiner. What is your status? So because of that impasse, there's been dozens and dozens of people that went to court. So there's a lot of court cases. And from these court cases, we've analyzed them. We've researched them. We studied them. We've developed a guideline of factors that must be present for you to qualify as a trader in securities. Now, this is at a high probability you can qualify. Nothing is certain because, again, there is no code. There is no law about this. So, but from this body of tax court cases, we've come up with principles that we think that can qualify as a trader. Now, it's crucial that you work with someone that specializes in tax trading rules because if you do not, you're running yourself a risk. You can work with any accountant or CPA that you want, but if they don't specialize in this, as you can see, you have to have knowledge of these court cases and have the ability to analyze them. Then you're going to put yourself in a situation that's going to be increasing your chance of being audited, and if you are audited, you're most likely going to lose. And again, like I said, most accountants do not specialize in this because it's really, it doesn't make any point for them. Before I worked for Online Trading Academy in my prior firm, and also I had a business I owned in the past, there were maybe 1 or 2 traders in a year out of 1,000 clients. So you can understand it does not pay to specialize in tax trading. Now, let's get into what the IRS does say. And we have a publication, Publication 550. Now, a publication is not law. It is, if you will, a guideline in simple English to explain what the code means. But it is not binding because it's not law, meaning you cannot go with this to court and say, this is what the publication says. But let's look at the definition. You'll find this definition very vague if you read it carefully. It says that to qualify as a trader in securities, you have to, it's an individual that purchases and sells securities for his or own account with the expectation of making profit on daily market movements and not from dividends or capital appreciation. And the activity has to be substantial, continuous, and regular. If you read this definition very carefully, you'll see that it's not clear at all. Because they do not define what daily activity means. So some people ask me, hey, Michael, do I have to trade every day? And the answer is absolutely not. Do you go to work every day? If you have a job, do you go every single day of the week to work, including weekends, including federal holidays? The answer is no, right? So daily is not defined here, but it could be theoretically every day, several times a day, every other day, 3 times a week. That's all daily activity. So it's not defined clearly what daily is. Then what is the activity has to be substantial. Substantial is a relative term. You know, I mean, $5 may mean a lot to someone but mean nothing to somebody else. If your name is Warren Buffett or Bill Gates or one of the other billionaires of the world, probably even $50,000 means nothing to you. But if you're just an average working person and all you make a year is $50,000 is a lot of money for you. That's relative. Substantial is a relative term. But more so than this, what do they refer by the word activity? Are they talking about amount of trades you're putting in? Are they talking about the time you spend? Are they talking about the amount of money you're trading with? Which one is it? Is it a combination? Is there a certain threshold to this? What is it? So obviously, no, this is an excerpt directly from the IRS. So nothing there is clear. And then what's continuous? So continuous we understand is an activity without interruption. But what's defined as an interruption? They're not saying what's defined as an interruption. Can I be out of the market for a day, 3 days, 3 months? What is considered as an interruption? And then last one, again, another relative term is regularity. So regularity is defined as something that you routinely do on a routine basis.